So I'm with Alto IRA, and today I'm going to be talking about the problem of misallocated capital that we have in the markets. So disclaimer, none of this is financial, tax, or legal advice. You guys all know that standard stuff. A little bit about me. So I am Director of Partnerships at Alto IRA. I am also a first-year law student at Stetson. So if Perkins is in the room, go ahead and slide into those DMs, and we'll talk after the conference. Yeah, and this is my pre-COVID photo. So I've aged a bit, and I'm having less fun than I was back then, like everybody. So question, I know there's not too many people here, but I'm curious to get a show of hands. Who has a retirement account? That's every single person. Amazing. So not surprising, the amount of money in retirement accounts in the US is massive. There's almost $40 trillion in there. This is from the peak of the market, so obviously we're a little bit down from where we were at. Unfortunately, don't check your portfolios today. Most of that money in retirement accounts is in IRAs. The second biggest chunk there is employer plans, 401ks, 403bs, etc. And then another show of hands in your guys' retirement accounts, who is investing in passive index funds? Most people, okay. Also not surprising, so passive investments have been blowing out active investments for a while. And this shift is growing, and it makes sense why. So you're not alone in doing that, but you might be misallocating your capital. So active funds tend to underperform their benchmarks. Almost 80% of fund managers miss their targets. They miss their goals, their benchmark returns. So why did Cathie Wood say this? So Cathie said that she thinks that the shift to passive investments is the, let's see, how did she put it? Basically a blunder. It's a blunder, it's a misallocation of capital to shift into passive investments. If someone can call Cathie, I'd love to ask her, but I have an idea of why she said this, and it's a problem that I think impacts everyone at this conference and something that Alto is working to solve as well. So this is the gap in retail portfolios between what professional money managers do and what retail investors do. Retail investors tend to allocate less than 5% into alts. Professional money managers tend to have much higher allocations to alternatives. 25% is about the average number there. Yale goes all the way up to 50%. So there's an investment gap there. And so the question with these index funds and these passive investments is your incremental dollar impactful? I would argue that it's probably more impactful in an alternative asset. An example, I have AcreTrader and Farm Together up here as partners of Alto, where you can deploy capital directly to farms in the US that are growing crops. Or you can choose to invest in these public, ETFs through your 401k provider, through your IRA custodian. But which one is going to have more beneficial impact? I'm going to argue every time it's going to be private markets. If you look inside these public ETFs, the one on the left is the number one investment is government bonds, doing nothing for agriculture. The rest is futures products that might drive up the price of these commodities, but is not directly benefiting farmers in any way. The one on the right is pure play wheat. Sure, you get exposure to wheat, but you're probably misallocating capital if your goal is to try and encourage wheat production in the US. And you're probably misallocating capital if you're just buying this to get exposure to that segment versus something like investing directly in a wheat farm and a wheat production company here in the US. Same thing, so looking at the Big Daddy SPY, almost everybody owns this or has heard of it or traded it. There's a bunch of these funds. I'm not trying to pick on the spider here, but these big index funds, you're getting mostly allocation to FANG stocks. And is your incremental dollar really going to benefit anybody if it goes into a SPY ETF? It's probably not. It's probably more impactful if you're investing in these startup companies solving affordable housing, or your local taco stand. At least the money's going to stay in the community, and you're going to have a great place to get some tacos, right? Who doesn't love a brewery? There's companies out there doing exciting things, solving energy problems. So these companies are solving real world problems, and your dollar is probably being more impactful there. So why is this important to the people in this room? It's interesting, but why is it important? It's important because we're not competing against each other for dollars. We're competing against SPY for dollars. All the dollars are going there when maybe they shouldn't be. Alto kind of opens up access, that's our whole mission, opens up access to that money. So that's our whole goal. It needs to be as easy for investors to deploy capital into these private investments that can change the world as it is to get your paycheck dropped into your 401k and buy a mutual fund every paycheck cycle. Until it's that easy, we're probably not going to win that fight against SPY, but we're going to work towards that every day. So this is how Alto does it to get you guys access to retirement accounts. You can open an account online. Consumers can do this in 3 minutes. Very simple to do, very easy. Second step, and I can't see this board, but I'm sure you guys can, so I'll let you take a peek. This is our newest API, and this is how we're bridging that gap and making alternatives as accessible as SPY or mutual funds or these other types of investments. So this is our new Pay with Alto button. Issuers, portals can drop this into their checkout flow, into their experience with customers. And when the customer clicks on that, they're going to stay on our partner's site. This widget will pop open, and the investor, in just a couple of clicks, is able to deploy their retirement account into that alternative asset with zero paperwork, zero friction. Alto will do the magic on the back end and make sure that money gets there in a tax-advantaged way. So questions on this? Who all in here, just show of hands, is an Alto partner already? Anyone? Types of assets. Security tokens is something that's really interesting for us. It's kind of a new segment. We have the crypto IRA. We have the alternatives platforms like AngelList, Republic that I showed you, AcreTrader. Security tokens is really what we see as like the next frontier of this. So we're working with Vertalo and others to be able to custody those tokens securely. And also that's just going to bring more benefits and bring those similarities between alternatives and the current kind of status quo in public markets. It's going to bridge that gap. The liquidity will be there. A lot of people. Question? No, you're good.
This is after a self-directed IRA as an example with Alto.
That's a great question. Yeah. So this is actually our brand new API. At launch, it will be for users with an Alto IRA. We have 16,000 plus accounts. 70% of those are accredited investors. So any of those users can access and use this widget directly to pay. The future state of this, and what's cool about the API-based design that we're using, is the future state of this will allow users to open accounts and fund accounts in that same widget. So when we push the updates, users will be able to open their Alto IRA, fund it in the widget without ever leaving our partner's site, and deploy and commit capital to that investment seamlessly, essentially.
That's not part of the automated process, right? They would have to open a new one and fund it with money as opposed to moving it over. But that's where the friction is.
We do both. That part is an industry-wide problem. Working with the counterparty custodians, Fidelity, Vanguard, Schwab, these guys don't want to necessarily make it easy to pull money out. So that's a problem that we tackle. We do offer transfers. It can add a little bit of friction as much as any other kind of IRA provider out there. But you do have the option to fund. So depending on the investment you're making, especially if it's a Reg CF deal, we have a lot of partners who have small minimums. So in those cases, if you haven't hit your contribution limit for the year, then you can just fund and deploy capital without a problem. A lot of times we have like the big angel platforms as well. Those types of investors, the accredited investors, will transfer either the funds that they need for that specific investment ahead of time, or they'll just transfer a big chunk of their portfolio and then kind of go shopping. So we have a pretty robust partners list where they can source these investments as well. And that's sort of where the vision is going, right? With the partners list and how Alto has structured itself is, one, we're the rails to make the payments happen, but we're also trying to build that ecosystem so that our investors can find interesting tokens, interesting investments, interesting things to invest in. And yeah, that was my last slide. So I'm happy to field any more questions you guys have. If you haven't had a chance to meet me or anyone on the Alto team, there's a couple of us here, so we'd love to talk with you more about that. And yeah, really appreciate you guys being here. Question? That's a great question. So we're a trust company, so we are able to custody the IRA for tax purposes. We're not a broker-dealer or anything like that, hence the not investment advice disclaimer there. Welcome.
But you're able to actually display your partners that work with you on your Alto site to your clients?
We can, yeah. So the exception there is, and the reason we do that is we're able to point to the partners because we're not pointing to any specific investment, so we're not soliciting investments that way. And users are free to browse our partners' websites kind of at their leisure, but they do explore that and kind of find deals that way through those partner sites eventually. Yeah, I love that question. Thank you. So a couple firms that are here, T0 and Templum. Secondary markets is tough, so it's a nut we're trying to crack. We have our crypto IRA that's done through Coinbase. And I'm using that as a proxy secondary market for purposes of your question. That works incredibly well because it's liquid. Users can trade in and out of Bitcoin, Shiba, Dogecoin, whatever they want to do very quickly, and they don't have to worry about reporting a 1,000,000-page 1099 to the IRS at the end of the year. So that's a huge user benefit. They can trade as often as they like without the tax kind of reporting requirements around that. So that's huge. I think secondary markets, once the liquidity is there, it's a solution that we're working towards, and we think that's going to be absolutely huge for our retail customers that just really like trading. I think COVID really accelerated the shift to investors wanting that type of experience, that seamless experience. They're looking for different asset types, and they just want to be, I think one of the stumbling blocks is they want that liquidity. So they want to be able to get rid of it. They might not necessarily want to hold it for 5, 10, 15, 20 years, as is the case with a lot of alts. So awesome. Hope that answered your question. Went on a little bit of a rant there. Yeah. Awesome. Thanks, guys. Appreciate it.